there, just a quick video. It's obviously coming to the middle of March, so we have a couple of weeks left before the end of the tax year, and really now is the time to think about any last minute tax planning that you might want to do for the 25-26 tax year. So you could be thinking about a number of things, and this is not an exhaustive list. There are potentially more things that may be applicable in your case. But certainly, as a dentist who is working through a limited company, you could be thinking about whether there are any last minute salary adjustments that need to be made. You could be thinking about the level of dividends, whether it's too much, too little. You could also be thinking about employer funded pension contributions that your company may make on your behalf. Please note, little caveat, I'm not a pensions advisor, and pensions are a specialist area, and so specialist advice should always be sought. But if you're thinking of making a pension contribution anyway, then obviously getting the timing right is important. If you're self-employed, then you could be thinking about if there are any expenses that you know are coming up, and if you have a choice of whether you do them this side of the tax year or the next side of the tax year, potentially which tax year it would be more beneficial for them to go through. I'm thinking of perhaps those larger expenses, like maybe there is a course, a CPD course that you're going to attend, maybe there are some loops that you want to purchase, something like that. And it's important to bear in mind, obviously, with equipment purchases, you might be paying for the equipment over a number of months because it's on hire purchase or something like that, a loan. But you can actually claim tax relief on it when you actually purchase. So that's important to note. Just trying to think of anything else. I should actually have made a note of what I was going to say, because as soon as you start recording, it all just goes. But the other thing that you could be thinking about, also if you're self-employed, is potentially paying into pensions. Note my caveat. I need to put a little asterisk. So yes, you'd be thinking about that. Obviously, if you also make superannuation contributions, if you are NHS as well, then you need to be mindful of that, because you certainly don't want to be breaching anything. I think it's just a good time for a general review, I would say, whether you're an associate or you're a practice owner. If you are thinking of buying a practice, if you're in process of selling a practice, you obviously want to really see if you can hurry it through before the end of the tax year, when the capital gains tax, on business asset disposal relief, it changes. It goes, at the moment, if it's a business disposal up to certain limits, then the rate of tax is 14%, but it is changing in just a couple of weeks to 18%. So you really want to see if you can push that through. So very quick summary. I hope that's been useful. Please do